Why does the price of gold change every day? Have you ever looked at the news or checked your phone and seen the price of gold going up or down and wondered why? Why is it that something buried deep in the earth for millions of years can change its value in just a few hours? It may seem confusing, even strange, but behind every shift in gold's price is a story. A story of people, money, fear, hope, and the way our world works. To understand why gold prices change, we first need to understand what gold is, not just as a metal, but as a symbol. For thousands of years, gold has represented wealth, power, and security. From ancient kingdoms to modern banks, gold has always been something people trusted. And because of that trust, its value is affected not just by supply and demand, but by emotion. Let's start with the basics: supply and demand. Like anything else, when more people want gold and there's not much available, the price goes up. When fewer people want it, or there's too much supply, the price goes down. But gold is not like fruit or cars or phones. It's not something people buy to use every day. Instead, people buy gold to feel safe. That's why the price of gold often rises during uncertain times. So, what causes that uncertainty? Many things. When the economy is weak, when inflation rises, when currencies lose value, or when political conflicts shake the world, people start to worry. And when people worry, they often turn to gold. It becomes a safe place, like a shelter in a storm. Investors call it a safe haven, and just like in a storm, when many people rush to the same shelter, its value rises quickly. But that's not all. Gold prices also move based on things like interest rates. When banks raise interest rates, people can earn more money just by saving, so they may choose cash over gold, and the price of gold drops. When interest rates are low, gold becomes more attractive, and prices rise again. Central banks, especially in big countries, also influence gold. If they decide to buy large amounts of gold, the price jumps. If they sell, it can fall. Additionally, the value of the US dollar plays a huge role. Gold is priced in dollars around the world. So, when the dollar gets stronger, it takes fewer dollars to buy gold, and the price goes down. When the dollar weakens, gold becomes more expensive, and the price rises. It's like a balancing act between currencies and commodities that happens every single day. But beyond all the data, all the charts, and all the financial talk, there's something deeper. Gold moves with human emotion. It rises when people fear tomorrow. It falls when people trust the future. It's not just about numbers, it's about our faith in the world around us. And that's what makes gold so unique. It's not just a metal, it's a mirror, reflecting our global hopes and fears. So the next time you see the price of gold rise or fall, don't just think of markets or money. Think of people, investors, families, leaders, reacting to a world that's always changing. Gold doesn't just follow the rules of economics, it follows the rhythm of the human heart.